On May 6, 2010, the stock market lost $1 trillion in 10 minutes. It took 5 years to find out why. And the answer was a guy in his bedroom in his underwear. 2:32 p.m. Eastern Time. The Dow Jones starts falling. Not a dip, a cliff. 998 points vanish in 4 minutes. Procter & Gamble, one of the safest stocks on earth, drops 37% in minutes. Accenture, a $60 billion company, briefly trades at 1 cent per share. 1 cent. Algorithms see the drop. They start selling, which triggers more selling, which triggers more. A feedback loop with no off switch. By 2:47 p.m., $1 trillion in wealth is gone. Then just as fast, it bounces back. 20 minutes of chaos. Nobody knows what just happened. The SEC launches an investigation. The CFTC opens a probe. Every financial regulator in America wants answers. They publish a report, blame it on a single large sell order from a mutual fund in Kansas. Case closed, except it isn't. The explanation doesn't hold up. 5 years pass. Then a whistleblower tips off the authorities. Suspicious trading patterns from May 6, 2010. Massive sell orders, placed and canceled in milliseconds, over and over and over. The trail leads not to Wall Street, not to Chicago, not to a hedge fund. It leads to Hounslow, a suburb of London. A semi-detached house, a bedroom. Navinder Sarao, Nav to his friends, born and raised in Hounslow, West London. He studies at Brunel University, gets a degree, then lands a job at Futex, a proprietary trading firm. He learns to trade. Turns out he has a gift. He can read order flow like a musician reads sheet music. He goes independent, trades from his childhood bedroom, E-mini S and P500 futures. The single most liquid futures contract on Earth, traded by the biggest banks and hedge funds alive. And Nav is beating them. With a second-hand computer and a consumer-grade internet connection, Nav notices something. High-frequency traders are front-running orders, using raw speed to jump ahead of everyone else. They're skimming pennies off millions of trades, legal, profitable, and infuriating. So Nav decides to fight back. His weapon of choice, spoofing. Here's how it works. Step 1. Nav places enormous sell orders, hundreds of millions of dollars worth. These orders are fake. He never intends to execute them. They're ghosts. Step 2. Other algorithms see the wall of sell orders. They think a massive crash is coming. Prices drop. Step 3. Nav buys at the lower price, then cancels all his fake orders. Price recovers. He sells. Digital bluffs, placed and canceled in seconds, thousands of times a day. He hires a programmer to automate it. Custom software, layered orders placed and canceled at machine speed. May 6, 2010, his algorithm is running hot, layering enormous fake sell orders into the E-mini market. His spoofing doesn't single-handedly cause the flash crash, but it's gasoline on a dry forest floor. A large sell order from a Kansas mutual fund strikes the match. Together they create an inferno. Over 5 years of spoofing, Nav makes roughly $40 million. $40 million. From a bedroom in Hounslow. He doesn't buy a mansion. Doesn't buy a car. Doesn't move out of his parents' house. He puts most of the money into dubious investment schemes. Con artists take him for nearly $30 million. The guy who outsmarted every algorithm on Wall Street gets scammed by basic fraud. April 21st, 2015, Nav is at his parents' house. The doorbell rings. British police, acting on a United States extradition warrant. The Department of Justice has charged him with 22 criminal counts. Wire fraud, commodities manipulation, spoofing. He faces up to 380 years in prison. He fights extradition for a year, loses, gets sent to the United States. He pleads guilty in 2016. 1 count of spoofing, 1 count of wire fraud. January 2020, sentencing day. The prosecution asks for no prison time. Why? He cooperated. He helped regulators understand how the entire system is gamed. He's also diagnosed with autism spectrum disorder. He didn't spoof to get rich. He spoofed because the pattern was there, and he couldn't not exploit it. He lost almost everything. The 40 million, gone, mostly to fraudsters. He lives quietly now. Sarao gamed a system that was supposed to be ungameable. And the only reason he got caught is that he did it too well. If stories like this are your thing, hit subscribe.